Okay, I have with me today Greg Mannarino. We're going to be going over the stock market, the US economy, where we think things are going, some slowdown potential as we go into an election year. Greg, thank you so much for coming on today's show.
I'm so happy to be back. Thanks for having me. And I think this is going to be a lot of fun.
Yeah, so I have two dueling positions, right? I want to know from you, and let me explain this. Where do you think the market is heading over the next 9 to 12 months? The reason I bring this up is uh, Michael Burry, the man who made, I believe, over $1 billion shorting the market during the Great Recession. He's now shorting the S&P 500 $1.6 billion and is telling the world the popular index S&P 500 is going to drop. On the flip side, Shark Tank investor Kevin O'Leary says this guy's got it all wrong. Yes, the market will go down one day, but he's going to be having all of these margin calls until that happens. What are your thoughts? Where do you think the U.S. stock market indexes are going? What are your thoughts on this, back and forth that they're having on the internet?
Well, it does appear that Michael Burry's timing was pretty impeccable on this here. He made that big announcement. The market has dropped since that time. Look, Michael Burry is looking at exactly what I'm looking at here and what most people should be looking at. Forget the stock market for a moment. We need to look at the driver of this market, which is the global debt market, which right now is selling off pretty rapidly. We're watching the U.S. 10-year yield, which is the benchmark, rise in what I would say appears as an uncontrolled fashion. I've been warning people about this for a very, very long time. I have an indicator which I came up with. It's called the MMRI, Mannarino Market Risk Indicator. It's 100% free to anyone who wants to look at it. It's right on my website, traderschoice.net. Now, this indicator measures risk in the market in real time. It's not a crash indicator. However, with that in mind, we are now nearing an extreme level of risk. If we were to just look at, for example, the US 10-year yield, again, the benchmark, every single time we've seen it hit 4%, the market starts to get rattled. Investors start to jump ship. You see the stock market fall. We're over 4.3 as the time we're doing this video blog. As a matter of fact, we've come to know, those people who do follow my risk indicator, the MMRI, that 250, MMRI 250 appears to be the line in the sand. Every time we've crossed it, this market has fallen under pressure. Now, Michael Burry obviously is watching risk in this market, as every investor should. Risk is it's a double-edged sword here. For someone, let's say, that's a longer-term investor, I've said this on my website recently, just sit tight here. No reason to go running for the hills. The last thing anyone wants to do is panic, okay? Sit tight if you're in long positions expecting to hold these things for a longer period of time. There may be a good opportunity to add to those, but not yet. I think people need to sit back and just wait to see where this goes. The Federal Reserve has several tools that they can use to intervene here. Are they going to do that? Well, we've seen it before. What am I talking about? Number one, the Fed can buy more debt. They can push the 10-year yield lower. Number two, they could find a way to weaken the dollar on a relative strength basis. This is bullish for the market. Number three, the Federal Reserve has a trading desk at the New York Fed. The Fed buys large cap stocks. It's a big secret. No one's supposed to know, but they do. This is how the Fed keeps the market propped up. We haven't seen them jump in yet. All we've seen is this market fall under increasing pressure since risk is rising. Now, Michael Burry, again, going back to him, there's no doubt in my mind whatsoever he is watching risk. If risk gets out of hand, right now, again, we're seeing a phenomenon occur that people that follow my work knew was going to happen and know is going to happen as we move forward. That is this global debt market time bomb. It's going to go off. We're seeing a big sell-off here. Bond yields are rising. That's how it works. When debt sells off, yields rise. Okay, where does the cash go once it does that? Well, it's bleeding out of the debt market right now. It's putting pressure on the stock markets. Cash is bleeding out of there. And I think it's more or less sitting on the sidelines. We're not really watching it make its way into commodities too much, a little bit, Crude oil bottomed out recently at like 77, 78. We're seeing crude go back up. Eventually, we're going to see a move into cash, in my view, into commodities in a big way. But Michael Burry's timing here is pretty amazing. I don't know if he watches the MMRI. I wouldn't be surprised. It's a pretty ingenious little tool. So, of course, there's going to be two sides of every trade. You're going to have this investor, who doesn't see it, and this other investor who does. I think Burry's right here. Unless there is direct intervention, I've been warning about this for weeks and weeks on my video blog. Unless there's direct intervention by the Fed to do something about this runaway debt market, which is selling off pretty rapidly, this market is going to fall much further. We don't know where the bottom is. We know the Fed jumped in here at Dow 6,000 with QE1. The market could potentially eventually fall to 6,000 with regard to the Dow. I mean, that's a profound difference from where we are today. But no one knows. See, look, this market is in the la-la land. If we realize that the driver of this market is the global debt market, why do people think that central banks have chosen to buy all the debt to keep rates suppressed? What this does, it's a very simple mechanism. When central banks get in here and buy all the debt, as they've been doing since the last meltdown, it opens up a doorway for cash to make its way into risk assets. In this case, we're talking about the stock market. So they have been very successful to reinflate a stock market hyperbubble, in my view, and also a real estate hyperbubble, in my view. We haven't even begun to see the commercial real estate nightmare that's going to unfold at 1.2. So look, with regard to looking forward in this market, it all depends on risk. If risk continues to rise, as we're seeing, based upon the global debt market selling off, this market will be much lower. If, in fact, the Fed or the central banks get in here and start buying more, well, then the market will go up. I think, okay, we're in a presidential selection year. Okay, I've been telling people I believe they're going to try. I heard
the word selection.
Yeah, they're going to try to keep the illusion of the market going. People see the market higher, they think the economy is strong. Nothing could be further from the truth. There's no connection in here at all. There's zero. So that illusion may be real depending on what the Fed does, but without direct intervention, I've been telling people in here several times already, without that, this market's going much lower. Well, we need to watch risk. We need to watch the 10-year yield, the relative strength of the dollar, and better yet, watch the MMRI. Again, free to anyone that wants to use it, right on my website, traderschoice.net.
Traderschoice.net. Okay, thank you for that. I'm going to go counter to what you're saying, only because I want to flesh this out for my viewers. So the big behemoth Goldman Sachs, they actually came out today saying that they believe there's a lot more room for growth in the market and that investors should have a bullish mentality. So is this real, or is this bullish crap that they're feeding us? Because the S&P 500 has pulled back 4.6% since the beginning of August. And there's worry, like you say, that this thing could, that risk could trigger and we suddenly see a cascading effect. Or is there some truth to Goldman Sachs? And because of that pullback, there's now room to go up more.
Absolutely. This market has done nothing but go straight up for quite a while. This market has not had a real correction or a pullback in quite a long time. There's some kind of weird thing going on. If you're missing out, whatever it might be, market needs to give some back. It's not so much that the market is falling. This is normal. It is absolutely normal for a market to fall 5, 10, 15, even 20%. This is normal. Okay, but the fly in the ointment here is risk. The risk in the market is rising, and that's the driver here. It's the fact that risk is rising, and that's why the market's falling. If that doesn't change, then this is going to be this is eventually going to be a terrible price to pay for this. But that's what we're seeing right now, and that's what I'm looking at. And like I said, longer term investors sit tight. No reason to panic. Goldman may have it right because the Fed might jump in here and start buying more, which I think is the most likely scenario. The goal of every central bank is to own it all, to continue to inflate, period, the end. This is how they survive. And it's their single power. Most people have no idea about that. But, for people that are like intraday traders, day traders, swing traders, this is a golden opportunity for them to make money. They want to see increasing risk in the market. I mean, look, there's always people on every side of this equation here. Longer term, this thing is eventually gonna break. I mean, the global debt situation is so far out of control. And it can only get worse from here. What do we have? We have so-called representatives here in the United States, around the world, talking about spending even more money that we would have. We're already the United States here, the most indebted nation in the history of the world. They're going to continue to pull cash into the now. And this mechanism here is going to go on until it doesn't. And I think we're hitting what I would call a moment of maximum saturation. And the first step in seeing this debt you have to understand something too that's kind of crazy. It's a weird paradox. Although the world is awash in debt, and although it's going to get much, much worse, the system itself operates in a perpetual vacuum. It can never be made whole. It's a debt-based economic system. It demands that debt be borrowed into existence. It can't stop. It's not a wealth-based system. So no matter how much, what I'm trying to say is, no matter how much debt they pile on and then pile on top of that and pile on top of that, it can never be enough. It can never satisfy the black hole underneath it. It's an astonishing thing. This is how it's set up. This is the debt-based economic model, which I've been telling people is a curse upon the earth here. When the founders of our nation knew that, this is why they wanted a wealth-based system or a commodity-backed system. What have central banks been doing? I've been telling people for 10 years or longer that central banks are attacking their own currency, sucking out the purchasing power of it. We've watched the US dollar lose 98% of its value, purchasing power, since the inception of the Federal Reserve. And they want that last 2%. This phenomenon is going to continue as they move to a new system. I believe a new system is coming, a new set of rules, a new paradigm. It's in our face. And again, this moment of maximum saturation, the first step is inflation. And we're seeing global inflation with no end in sight. I mean, what have we been hearing about? Central banks, we're raising rates. It's going to eventually stop. It's temporary and it's transitory. All we've seen is inflation go higher and higher. Food inflation outpacing everything. Now we're hearing about, which I think most people understand, shortages, supply chain disruptions, all this stuff they're going to throw at us down the line here. There's no doubt about it. They always tell you what they're going to do before they do it. So my video from today, was, a matter of fact, was telling people, get ready for what's coming, because this system operates from crisis to crisis to crisis, and we're marching right into the next one because they're telling you what it is. Shortages, resource problems. I've been telling people this for 10 years as well. But this is where we are going here. If people are looking for some kind of saving grace here, ain't coming. All right, they must be ready for what's going on, because the central banks are in control of the global economy. They control the global financial system, and they control financial markets. Basically, with these three things, they control the world, and they are the real government, unfortunately, and they are working towards a goal. Their goal is to own it all, to be the lenders and buyers of last resort, and people are sitting here doing nothing about it. Pointing at these people because they're bad, and these people here, meanwhile, they're missing the whole point. This is central banks, and it's deliberate.
Wow, thank you. Speaking of the central bank, with this inflation starting to creep up again in the last 30 days, do you see the Federal Reserve Bank raising rates, or is Jerome Powell finally going to let things breathe and stay neutral? I don't think we're ready to, go down in rates. What are your thoughts on the Fed's next move?
Well, it's really a great question. I've been calling what the Fed would do now for over 10 years. In over 10 years, I've been wrong 3 times, and only 3. That's a fact. Anyone who follows my work knows that's true. I think the Federal Reserve is going to keep the pressure on. Which means they are going to, again, these incremental 25 basis point hikes that we just got out of the ECB, and then we just also got out of the Bank of England, same thing. They're following lockstep. They all have their own, they all are working together here. We're going to see this continue for a while. Then again, we're probably going to get another pause here. But the fact of the matter, look, they are not raising rates because they want to stop inflation. I've told people this since day one. They are raising rates to cut the availability of credit off to small businesses, which need that to function on a day-to-day basis, and to the consumer. That's what they're doing. This is an extinction level event. The middle class is being wiped out deliberately by central banks. Central banks have been promising us for how long? The Fed, it's going to change. It's going to change. We're going to raise rates. They're going to go down. No, it's never been meant to do that. It's only meant to cover. If the Federal Reserve, we now have a zero reserve system. We used to have a fractional reserve system. I think it was May of 2020, the Federal Reserve said, no, the depository institutions, a fancy word for saying banks, don't have to keep any money in reserve. Zero. Okay. So with that, we've seen inflation surge out of control. If we even went back to a fractional reserve system, meaning that these institutions have to hold a fraction of the cash that's deposited in them, we could contract the money supply. If we could contract the money supply, even a tiny bit, that would actually stop or slow inflation. Why is it? I keep asking people this question. You will never hear that from any of the mainstream propaganda, CNBC, Fox Business, pick one, Bloomberg. They're never going to tell you that the Federal Reserve has the power to reinstate a fractional reserve system, to have the institutions hold cash in reserve, contract the money supply. But no, this is distraction. It's the deception. It's the look here, don't look over there that I've been telling people to look out for since time immemorial. This is a game that they're playing here. They can raise rates incrementally from here to kingdom come. It's not going to stop what's going on. The Federal Reserve, in concert with other central banks around the world, have created a monster on an unprecedented scale. That's this global debt market hyperbubble, which again can never be made whole. It must operate in a vacuum. So there's no way by raising the federal funds rate 25 basis points or any other central bank following suit doing the same thing that we can stop what's going on here. We have this overwhelming amount of cash in whatever form it may exist around the world, in digital or printed, now chasing the same, or in this case, a lesser amount of goods. It's economics 101. You get inflation. So they can do whatever they want to without contracting the money supply, which I don't think they're going to do, because again, a central bank's power resides in one thing: its ability to inflate, to create inflation. That's all central banks want to do, is create inflation. Central banks have one product, and one product only, that is debt. They produce debt, and that's it. That's their product to the world. And astonishingly, people think that the money that they work for is theirs. No, it is not theirs. It's owned by the issuing central bank, plus interest that they print out of thin air. People work for the privilege of borrowing that cash from the central bank. It's borrowed cash, and you owe it back. The system is so twisted. If people really knew how it worked, I think people would be running for the hills, or would have pitchforks in their hands at the front door of every freaking central bank around this world.
Yeah, maybe we need an updated version of the creature from Jekyll Island.
Absolutely, a must read.
Yeah.
People need to read that book. I've been telling, read the book. You want to know what's going on? Read the book.
Yeah, I'm trying to get the author to come on my show. Staying in the same vein, Greg. Your friend, my friend, Gerald Celente over at the Trends Journal, he's always talking about Slavelandia, how they want to enslave us, control us. Is the central bank's main goal to control all the assets, or is it to control us through the assets?
Everything. Okay, what they're doing now, and I've been telling people this, I don't know how long, they're creating dependency on the current system. They need as many people they can to become slaves to the current system. What we have here is, right now, by the Federal Reserve ran a study last week, which confirms what I think we all know. People have depleted their savings. They've run out. Meanwhile, people now are carrying their highest debt burdens in history. Something like 61% or 69% of American families, working families, cannot. They are living paycheck to paycheck. People can't survive without borrowing. This is a mechanism to create slaves to the system. And at the same time, central banks, including the Fed, they're using their one product, their currency, to buy it all, mostly debt. They're buying all the debt. They have fulfilled their goal to be the lender and buyer of last resort. Tax receipts here in the United States, just for as an example here, we're not even keeping up in the most remote sense with what we're spending here, and spending to foster wars around the world and everything else. This mechanism will remain in place. Again, it empowers the central banks. Why do people think, for example, there was all this rush to raise the debt ceiling? We got to raise that debt ceiling. We got to raise that debt ceiling, because again, if we, the people of the world, said enough is enough, we're not borrowing anymore, yes, of course, the global economy would suffer. It's going to suffer much worse down the line anyway, but we could shut down the central bank system. If you can take down one central bank, for example, if we would have said, we're done, we're not borrowing, we're not raising the debt ceiling, yes, the economy would grind to a zero. Everything would stop. We probably would end up into a credit-free situation. It would be a very difficult, in other words, cash wouldn't work. Because the system, look, the system is illiquid. It's always illiquid, no matter how much cash they pump into it. So yes, there would have been a lot of financial suffering. Maybe we could have come up with a compromise. But to take away any central bank's ability to inflate is how we win. Otherwise, we lose. No matter who they put behind the Resolute desk or any other place in the world, it's the central banks who have become the one world government because they own it all. Like I said, who runs the economy? It's central banks. Who runs the financial markets? It's central banks. Who runs the financial system as a whole? It's central banks. So how do we have any free choice? We have nothing. We've all become slaves to their system. Gerald has got it 100% right. And I'm telling everyone that's listening, we need a freaking revolution. We need a revolt. That's the only way that we can change this whole thing. But it'll never happen because why? Dependency. They're going out of their way to create dependency on the current system. And I think it's going to get a lot worse from here as people are pushed down to the lower rungs of society because the middle class is being exterminated on an unprecedented scale.
Yeah, yeah. I know you're a big fan of getting out of debt. That could help people get out of this system. Is there one particular strategy for getting out of debt that there's the snowball, the avalanche, 4 or 5 different ways. Is there one in particular that you like?
Absolutely. How about people can, at any moment, people can renegotiate their debt. I have a paper that I put out. It's free to anyone who wants it. I break this down step by step and how to get yourself out of debt, unsecured debt. In other words, that's not linked to a house or something like that. Major corporations, they renegotiate debt every day. Okay, so can we. But then they hold your credit score and dangling in front of your face. That's something you could fix down the line. People don't understand that they can get themselves out of debt very, very easily. I outline how to do it step by step. If people do subscribe to my free newsletter, which they can do so from my website. I publish this thing several times. And if anyone is interested in having a copy, just contact me. I'm pretty easy to get in touch with, and I'll send it to you for free. Yes, I want people to be out of debt. I want people to be in hard assets. My favorite asset of all time happens to be physical silver. I love this stuff. I think based on the Dow gold ratio, gold silver ratio, it's massively undervalued. And commodities in aggregate are massively undervalued. And eventually we're going to get a movement of cash into commodities. They're going to spin people's heads around like The Exorcist because you got the debt market meltdown, stock market meltdown, cash moves into hard assets, into real things, period. That's how it's going to play out. There's no doubt about it.
Yeah. Yeah. Imagine, gold outperformed the Dow Jones over a 30-year period. Imagine if they hadn't been doing, market manipulation, suppression of gold and silver. Like this commodity should absolutely be blowing it up, but it is going up against the gangsters and the banksters, that want us to be indebted. Now, speaking of gold, I'll ask you this last question and I'll let you go on this, but gold has come down about $100 an ounce over the last couple of weeks. Do you see that as a buying opportunity? Do you think it's going to go lower in the short term and then go up? Or do you think we're kind of finding the bottom and it's about to go back up? What are your thoughts on gold?
I think the reason why we're almost seeing a pan sell-off situation, meaning everything is kind of selling off. You got cryptocurrencies under pressure. You got commodities, except for crude. Crude pulled back and now is going back up. When you have the situation that we have right now, where the market's getting rattled and you're seeing the stock market under increasing pressure, the market kind of throws the baby out with the bathwater. So I think any dip that happens with regard to physical gold, silver, platinum, palladium as well, these are buying opportunities, period. And in a full-on crash scenario, which we may be in the early stages of, depending on where risk goes here, Michael Burry really might have this right at this particular time, but it all depends on risk, watching the 10-year yield, watching the relative strength of the dollar, watching the MMRI, as I said, free to anyone who wants to use it on my website. I'm not surprised to see this here. People, that's just how the market works. In a full-on meltdown, you generally see everything drop at first, and that does present major opportunities. I think people who are stackers, I'm a stacker, are holding hard assets, gold, and especially silver. Again, my favorite of all time. I don't think about the price of it at all. I realize at one point we are going to get an implosion in this debt market. This is going to wipe out world stock markets, and cash is just going to move from one reality into another. Again, I tell people it doesn't grow little money wings and fly away. It just moves through the market in predictable patterns. Risk on, like cash moving into the stock market, becomes risk off, cash coming out of the stock market and going into commodities. I think we're going to see a commodity super cycle unlike anything people can possibly believe at one particular time.
Great. Hey, I want to thank you so much for coming on. If people want to learn more, tell us your website one more time, just so people can go check it out.
Sure, traderschoice.net. You can follow me on YouTube. I'd appreciate that. You can contact me through my newsletter. I'm always open to discussing things with people. So yeah, I'm a pretty easy guy to get in touch with.
Great. Well, Greg, thank you so much for coming on and sharing your wisdom. I hope you have a great rest of your day.
You too. Thanks.